Startup Street, I'm Arundhati Ramanan, and these are the top headlines from the startup space. Microventure capital fund Ivy Growth Associates launches Arigato Capital, a VC fund with a target corpus of 250 crore rupees. The first close is targeted at 100 crore rupees and will back startups beyond seed stage or in pre-series A stages, offering an average ticket size of $500,000. Singapore-based early-stage startup investment firm Thinkuvate launches their first India-focused fund with a total corpus of 100 crore rupees. The India fund will look to invest in tech startups across sectors with an initial amount of up to 3 crore rupees. The company aims to invest in 12 to 15 startups every year throughout this fund. Housing finance company Sitara secures 680 crore rupees in an equity funding round from Upward Venture Partners. With this, the private equity fund has acquired a majority stake in Sitara. Logistics services provider Delhivery shares fall the most since October 2022. Despite a decent Q4, losses narrow to 65 crore rupees annually. It reports a double-digit growth in revenue. Apple is challenging a $1.9 billion fine levied by the European Union for thwarting fair competition from music streaming rivals, including Spotify. The iPhone maker has filed a suit at the EU's General Court in Luxembourg to topple the March decision, Bloomberg reported. Actor Scarlett Johansson expresses shock and anger after OpenAI uses a voice which she claims is eerily similar to hers. Johansson had turned down an offer from the company to lend her voice to a new conversational ChatGPT model. Those were the headlines that we're tracking for you this evening. On What's Brewing, education lending startup Propelld has raised $25 million via debt for Edgro, its wholly owned subsidiary, which is a licensed non-banking financial company or an NBFC. Edgro has raised capital from Credit Saison, AU Small Finance Bank, Incred Financial Services and Northern Arc Capital. Joining me now to discuss this further is Victor Senapati, the co-founder of Propelld. Victor, thank you so much for taking time out and being on Startup Street with us today. You know, Edgro was launched only in 2023. So what is the kind of opportunity you're seeing when it comes to education lending, especially in Tier 2 and Tier 3 cities, which is who you're catering to through this, right? So how are you making access to finance easier versus the traditional players? Take us through your offerings as well.
Hey, Arundhati, hi. It's a pleasure to be here. So, yes, Arundhati, when we started, the whole idea about Propelld was how do we democratize access to education? We identified financing as one of the biggest challenges in education. And, when we talk about India being a global powerhouse by 2050, we will, and when we talk about our demographic dividend, the demographic that we have has to really bring out some dividends, right? And that's where education comes in. And what we saw was that there are a lot of talented people in the country who are not able to get to where they want to because of a lack of financing. What we saw is that the traditional financing opportunities that are there, big banks that are there, they see financing as any other retail loan that's out there, like a personal loan, like a loan for taking a home. It's seen in a very generic way. But what we felt is that education has to be seen in a very different way. It has to be seen as an investment because honestly, that's what it is. When you invest in education, you start getting returns probably 4 years down the line, 5 years down the line, and that ROI has to make sense. And we started doing that. So we identified institutes which provide real good value to the students. And, we identify students who can get value out of the institutes, and we finance those students, taking into account what their potential, what their employability can be in the future.
All right. So you've raised this $25 million via debt to specifically grow the Edgro platform, right? So what kind of demand for loans do you hope to see in the next year? What's your current loan book looking like, and how do you plan to grow this further?
So we currently are at about a 700 crore loan book. Last year, we had dispersed close to around 1,200 crores. This year, we are looking to disperse close to around 2,000 crores. We are looking to go into multiple segments as well. We are growing our product. So, the liability side is is a 50% side, which people don't really talk about. People really talk about the demand side. As in, this is also another part where we have to solve for the segment. And this is just been a testament of our risk management practices. And the comfort we give to the lending ecosystem that we've been able to raise $25 million in just 6 months. And we hope to continue it further. We hope to get into co-lending arrangements with banks as well.
All right, so co-lending arrangements with banks is the way forward. But, give us a sense as to how both the businesses will work, right? What are the priorities of Propelld and how does Edgro support the core business?
So, we have to think of Propelld as a, financial entity, as a fintech, which brings in the demand, which brings in the product. And we work with multiple lenders on our backend. And Edgro is one of the other lenders with us, which is our wholly owned subsidiary. Having Edgro with us gives us a lot of control and, allows us to innovate a lot on our product offerings as well. As in tomorrow, we feel that we want to create a new financial product for the student. Let's say something around income share sort of product, or a product which works better for students with a certain sense of outcome. It's much more easier to build it at Edgro, which is our wholly owned subsidiary, versus taking it out to a bank at an initial level. As in, traditional lenders come in only when a lot of things are proven out over a period of time, and that's where Edgro comes in the picture.
Right. All right. So if you could quickly tell us, give us some color on the kind of technology that powers your platform. How do you aim to build your tech stack for better ROIs?
No, so the fintech entity that is there is a layer which connects, where there's a student-facing interface, and we work with institutes. At certain institutes, we integrate very deeply into their systems as well to get a lot of data. And powering all of that inside at the backside is an employability engine, which is the core of it, where, as I mentioned before, where the core piece of it is to be able to identify and vet institutes. Think of us as a Sybil for institutes. So we identify which are the institutes which are doing things well, where placements make sense, where there's value, the costs are not too high, and then we identify students who can really take value out of that particular course. So the students' academic history is going to matter. The students' softer factors, their communication skill sets are going to matter. Their adaptability is going to matter, and whether they can be really successful at that institute. That's
right.
going to matter.
And if we could talk about Propelld for a little bit, what kind of revenues are you clocking on that front, and are you profitable at this point?
So we are close to profitable, Arundhati.
Okay.
We made close to around 50 crores of revenue last year. This year, we also have a target of turning, profitable. And as in this year, we are expecting our revenues to grow from 50 crores to about 80 crores and, turn profitable. That's the intention.
So you hope to turn profitable this year. But, before we close, do you expect to raise more debt for Edgro anytime soon? And is the Propelld side of the business well capitalized? You had last raised equity in 2022, if I'm not wrong.
Yeah, so you're absolutely right. We raised money from Westwest Capital, and we have that money in the bank. We don't burn a lot of money, as in we are very frugal with respect to our expenses, and and that served us well. So we, with respect to debt raise, that's a continuous exercise, of course, and we need to keep raising capital, and we would be looking to raise more capital, get into co-lending arrangements on the debt side, so that we can innovate on products and reach out to more students. So those are things that are there in the pipeline.
All right. So looking to raise more capital there and more co-lending options with banks as well. All right, Victor, thank you so much for joining us on Startup Street, and we wish you all the best going forward.
Thank you so much, Arundhati. Thanks for having me here.
Yeah. Moving on, 90% of India's confectionery market is unorganized. A Bengaluru-based startup is trying to organize this highly segmented local candy market through its handmade delights inspired by local flavors. The startup recently received 41 crore rupees to further fuel its business expansion. My colleague Aishwarya Anand brings the story of Go Desi.
We all know Pulse, right? A powder-filled raw mango candy that hit every shop in mid-2015 and even touched the 100 crore mark within just 8 months of launch. Now, what led to Pulse disrupting the Indian market and becoming an instant hit with people across all age groups? Well, it was its homegrown taste, Kacha Aam. Now, that tells us about the opportunity of this category in India, where confectionery stands at $1.9 million. Go Desi, a Bangalore-based confectionery startup, is reimagining Grandma's kitchen and recreating 90s childhood with its handmade candies infused with local flavors like Kala Khatta, Imli, Churan Goli and Aam Papad, among many others.
At Go Desi, essentially what we're doing is, if you look at most of the brands that have been created in the impulse space, they are mostly Western chocolates formats, but on the same cash counter, there are enough and more traditional products which are packaged in white poly bags or not standardized or unorganized. That's why we see a very large white space, and we're trying to create a brand of taking basically the Desi products to urban consumers.
The startup has a line of 50-odd SKUs like Imli Pops, jackfruit bars, lemon shot, dried banana, among others. Go Desi claims to have sold over 15 million units till date.
Our largest category or the bestseller is a product called Desi Pops. It's a Desi version of a lollipop. It is basically fruit pulp milk mixed with jaggery and Indian spices like chili powder, curry leaves, etc. So almost 55 to 60% of our sales comes from Desi Pops. Then we have another new category is Desi Meetha, where we have barfis, we have coconut laddu. So this is our second biggest category, which is now building up. We also have a category called Desi Mints, where we have launched Meetha Pans. Most of our price points of all the products are between 5 to 20. And we currently have approximately 40-odd SKUs.
The company works on a margin of 40 to 43% on its sales. Go Desi currently operates 2 manufacturing facilities in Karnataka, run majorly by women. The company sources raw materials for confectionery directly from farmers.
We have 2 manufacturing units, one in Sira, which is around 120 kilometers from Bangalore, and another in Biddi, where we are here today. We close to manufacture almost 3 lakh pops every single day. So we have a capacity to manufacture almost 1 crore pops in every single month. Outside that, we have just started building our sweets capacity. So there also we have a capacity of manufacturing more than 1 lakh laddus or barfis on every single day. 85% of the products that we currently sell are actually manufactured by us directly. We source our raw materials directly from the farmers.
Coming a long way from a single flea market pop-up where the business started, Go Desi today sells its products through its own website, e-commerce marketplaces, quick commerce platforms, and at 45,000 offline stores. The company is now going omni-channel with kiosks at high footfall locations across the country.
In Karnataka, we are available in 10,000, 20,000 population towns and cities as well. As we build our distribution, we will go into Tier 2, Tier 3, and even smaller cities. But at this moment, our focus is in South. We sell almost on a monthly basis. We do close to 90 lakh odd units of different SKUs that we sell to our consumers. So we currently at a scale of around 3.5 crores per month in terms of our net revenues. We've been growing 50 to 60% year on year over the last 2 to 3 years. In terms of profitability, we are at this moment we are an EBITDA negative around minus 15%, but we should be able to achieve break even when we hit our targets of around 8 to 9 crores a month.
Go Desi recently raised 41 crore rupees from impact fund Avishkar Capital, along with participation from existing investors Rukam Capital, Roots Ventures, and DSG Consumer. The regional focused treats brand will use fresh capital for expansion, deepening SKU's presence and strengthen capacity.
Indian consumers now want Indian products. We feel that outcomes for brands which are in highly unorganized sectors will be big in coming years as more and more Indian adopt to this kind of premiumization. Our hope for this company is to we want to give the world Indian flavor. So tell the world about Indian treats, Indian confectionery, or imli or khatta meetha. Share it with the world and create a large outcome out of it.
Go Desi was one of the top winners of Amazon's Propelld Accelerator Program Season 3. The startup now intends to take this uniquely Indian or Desi taste global. With camera person Manju Nath and Balbir Singh, Aishwarya Anand for CNBC-TV18.
That's all about Go Desi's sweet dreams. But on that note, it is time for us to take a short break. Coming up, Cornext raises $2.2 million from Omnivore. We tell you how the company plans to use these funds right after this short break. Stay tuned. Welcome back. You're still with us on Startup Street. Logistics service provider Delhivery reported its fourth quarter results today. The company's losses persisted but have narrowed to 68 crore rupees as compared to the 158 crore rupees in the same quarter last year. Delhivery has also reported double-digit revenue growth and EBITDA has also improved on an annual basis. Mangalam Malu joins us now with the key highlights from those earnings. Mangalam?
Well, Delhivery reported their numbers post markets on Friday, and thereafter there was a mild reaction on Saturday's trade as well. But today, the stock was down, ended at the low point of trade, and that's largely because that key vertical, which is Express Parcel division, that saw just a 3% revenue growth. If you just take a look at the overall business of the company, the revenues grew by about 12% in what is a seasonally weak quarter. The operating leverage led to an EBITDA growth as well. They continue to report a net loss, but that's largely on account of high depreciation, which is a non-cash expense that the company has. And quarter on quarter, there was weakness on account of seasonality because it's the third quarter where the highest number of e-com shipments, etc. happened. The overall revenue grew 12%, but the mainstay of the company, which is Express Parcel, this is something that tracks the e-commerce parcel growth, grew just around 3% at 1,217 crores. And out there was actually a volume decline of 2% as compared to same time last year. What's done well for them is the part truckload business, which saw a growth of about 27% and a volume growth of about 21% as well. The full truckload business as well doing extremely well with a 59% jump on a low base out there, as did the supply chain business. But the weakness in the macro economy or the weakness in e-commerce shipments is clearly playing out. The company said that their large portion of planned long-term capital investments are now behind them. Going forward, operating leverage will play out once again as capex as a percentage of their overall revenue will come down by a couple of 100 basis points. They've achieved working capital improvement as well. But additionally, there was a management change. A long-time chief business officer, we have Sandeep Barasia, who resigned from the company citing personal reasons. But the weakness in their main segment is actually something that the street does not like. For Delhivery going forward, improvement in margins, improvement in e-commerce volumes would be extremely crucial to watch out for. Also important to watch out for will be what SoftBank does with its chunky stake in the company.
Right, Mangalam, many thanks for those details. Now, Cornext, which is building a fodder ecosystem to support dairy cattle farmers, has raised $2.2 million in a seed round from Omnivore. Founded in 2015 by Madhav Kshatriya and Firoz Ahmed, Cornext technology makes compact 50 kg silage bales that are then sold to dairy farmers through a network of village-level fodder entrepreneurs. So joining me now is the founder of the company, Madhav Kshatriya, who's also the MD of Cornext Agri Products. Madhav, thank you so much for joining us on the show today. You're building a fodder ecosystem to support dairy cattle farmers. So you're essentially solving the fodder deficit via your patented silage baling technology. So can you talk to us about what it is that you're doing here and how big of an opportunity is this?
Okay, first I'll talk about the crisis. There is a 35% shortage of green fodder in the country, which means millions of cattle starve without proper fodder. This actually turns into a huge business opportunity. Each day, a cow would require about 10 to 15 kgs to feed, which essentially runs into billions of dollars when it is organized. Heavily currently dependent on unorganized segment. Cornext has developed patented technology, which is also the most affordable technology in the world. And we currently have created about 300 plus entrepreneurs who are actively doing this, creating the backbone for the fodder that is required across the country.
Right. Can you then explain the business model for us? How does the fodder entrepreneur network work? How many do you work with currently and how much can you grow this by in the next few years?
Sure. So we currently have about 300, out of which about 10% of them are currently working with us. We are planning to create a circular ecosystem, integrating them onto an e-marketplace. So each rural entrepreneur would have spare potential, and Cornext envisions to buy back all the fodder that is produced and make it available to the dairy farmer. So it is a F2F network, farmer to farmer network, integrated very well using all the technology that is required.
Right. So it's a farmer to farmer network, as you said. But, on the supply side, talk to us about the sale of the silage, right? What kind of a network do you have here and who do you work with? And at what kind of prices do you sell? Because, the cost of it is what has been the biggest challenge, right?
Right. So there are three things that I would want to tell here. One, we work with large dairy cooperatives, and some of those are Amul's, Milma, KMF, Karnataka Milk Federation, etc. So there are several other cooperatives that will join the list as we progress. So that way, these cooperatives work as an aggregator wherever they are. Secondly, the model is decentralized. So KMF would be supplied all the fodder that they would be requiring either from Karnataka or some other district which is very close, which means the logistics, as you rightly said, cost about 8,000 rupees for us to deliver to the doorstep. Typically, grass currently is traveling, say, from Madhya Pradesh all the way to Rajasthan, selling at about 20 rupees. So currently, Cornext is successfully doing it at as low as 8 rupees because we have cut down on the amount of logistics burden that it would incur on the dairy farmers. That's the model that we are currently working.
All right. And, you've raised $2.2 million. How do you plan to spend the funds? By how much will you ramp up your production? And where are these production sites at? And how soon do you expect to raise more money after the seed round?
Okay. So we expect to invest this money onto R&D. As I said, it is already the most affordable. We'll be spending more money. When you compare this with European technology, it comes under 3-4% for a farmer to set it up. And we'll also be spending on creation of a marketplace. And currently we are a 30 crore turnover company. We would be looking at in the next 2 years to reach about 100 crore or a 3x from where we are currently. So the fund will be utilized to do R&D, expansion in the areas that we are currently working already, more intense work, and recruitment of resources. So this will be useful for us over the next 2.5 years. This will be good to go.
All right. And how much do you hope to increase? What do you, at this current point, how much are you producing and how much do you hope to ramp this up by?
Okay, so we currently produce on our own and also through the network. So the entire network is currently producing about 600,000. The infrastructure that we have created is good to go for about 600,000 metric tons. We visualize that we would be doing about 80 lakh or 8 million fodder rations by end of 25-26.
All right. You also mentioned about how the technology is cheaper than what you get abroad, right? So you're also exporting into other major agrarian markets in Asia, Africa, and Latin America. So give us some insights into how these markets are doing for Cornext, and where will the next leg of growth come from? Are you also looking at expanding into other markets?
Yes, we manufacture machinery. So typically, if you buy an European, it ranges from about 60 lakhs to 2 crores, whereas we do it at about 10 lakh rupees. So the markets that are the focus areas would be Asian subcontinent, Latin America, Kenya. These areas have dairy farming profiles that are very suitable to Indian context. So we will be ramping up our sales exports in terms of machinery. There are several countries that are signing exclusive agreements with us so that we will be able to take this technology to them.
All right. You gave us a sense of what the revenues are that you're, currently clocking.Here do you hope to end this year? What's profitability looking like? Also, climate change is a big challenge for the business, right?
Right. So we are profitable to start with. This year, we will be making much progress and we will continue the profit without any problem. Now, coming to the climate impact, see the entire crop, there are multiple benefits. We harvest maize at about 85 days as an input that goes into it. So there is less amount of irrigation that is required for watering the plants, etc. And you are traveling less. And the most important thing is when a starving cow would produce more to a mark of about 20% greenhouse gas emissions. And by feeding silage, you are controlling greenhouse gas emissions. It is the 5th largest contributor to the pollution in the country. And you also know, if you're sitting in Delhi, everybody knows that the crop residues are burnt, which is completely polluting the North India. By conserving and converting it into fodder, you'll be able to save that much of crop residue getting burnt. These are multiple benefits as far as climate impact is concerned.
All right, so multiple benefits there. But can you also give us a sense of what your current presence is and where will we see you grow in India at this point?
So we are predominantly present in Southwest as far as silage is concerned. So we'll be doing more intense work in these areas. And Northeast would be the next focus area for us.
All right. So Northeast is going to be the next focus area for you. All right, Madhav, we've completely run out of time, but thank you so much for joining us on the show today. And we wish you all the best with your venture. And before we wrap, actor Scarlett Johansson has lashed out at OpenAI after the artificial intelligence company released its latest conversational ChatGPT model. Johansson had turned down an offer from the company to lend her voice. Rachna Dhanrajani joins us now with more. Rachna?
Well, thank you so much for that. Scarlett Johansson has alleged that Sam Altman and OpenAI have used a voice that is very similar to the actress's character from the movie Her. In a statement, Johansson said that Altman had approached her last September and asked her to consider being one of the voices for ChatGPT. She said, and I quote, "He told me that he felt that by my voicing the system, I could bridge the gap between tech companies and creators and help consumers to feel comfortable with the seismic shift concerning humans and AI." End quote. She also added that Altman told her that her voice would be comforting to people, but after much consideration and for personal reasons, she declined the offer. However, 9 months later, it was her family, friends, and even users of Twitter that brought her to attention that the newest system, named Sky, has been launched by OpenAI along with 4 others, sounded exactly like her. Johansson also said that she was approached not once but twice by the ChatGPT makers, and the second time was just 2 days before the demo of Sky was released for public. That was last week in May. In fact, the day GPT-4o was announced, Sam Altman also tweeted saying "Her." That's it. That was the tweet, "Her." But now, after Johansson has issued this statement, OpenAI has issued a statement of their own and has said that they're pulling back on the voice assistant. In the company's statement, they have explained the process of voice selection, which began by working with well-known artists and award-winning casting directors and producers, as they call it, back early in 2023 to identify different voice actors that could become the voices in the product. And they in fact received over 400 submissions for the same. And this list was then whittled down to just 14 and then to final 5. And so the voice that is being alleged by ScarJo belongs to an artist, and any resemblance was never intended, is what the company has to say.
All right, Rachna, thank you so much for bringing us those details. But with that, it is a wrap on this edition of Startup Street. More news and updates continue on the other side. Stay tuned.